And in 2023, now this is just current licensed MLOs in the first half of the year, we're sitting just under 100,000 at about 99,924. And that number is projected to drop even lower by the end of the year. Welcome back, friends, subscribers, and those of you who just happened upon this podcast. My name's Tony Blodgett, and this is Market Shares. Well, look, if you're in the mortgage and real estate business, my guess is that your social media feed, like mine, has had a whole lot of posts about all of the loan officers that are getting out of the mortgage business. Now, we know the stats for real estate agents, and it sounds like it's about, a realtor leaves the market every 3 minutes or so. That's kind of a huge number, and I'm sure it changes over time, but that's the stat that I heard, and so I'll quote it here because, as you know, everything you hear on the internet is absolutely true. But these stats on loan officers are kind of scary, to be honest with you. So I wanted to touch on it briefly, but then I want to talk about what does it mean to us, and what should it mean to those of you that are watching or are a loan officer. You might be questioning your future in this industry. And, we've talked about this a lot on this podcast about things that you can do, but let's just go through these numbers really quick. Like I said, I'm sure you've seen them because I think every third post on my, Facebook feed was someone reposting these numbers. But bottom line is in 2021, just a couple short years ago, there was 179,428 loan officers in the country. So 179,000. In 2022, as things started getting a little more difficult, if you remember, rates really started rising there at the end of the first quarter. The first quarter was still pretty good, but it got difficult after that. And the number dropped from 179,000 down to 150,000 loan officers. And in 2023, now this is just current licensed MLOs in the first half of the year, because we're only here in September, so these stats are for the first two quarters. We're sitting just under 100,000 at about 99,924. And that number is projected to drop even lower by the end of the year. And some are suggesting that the trend is looking like we might end up under 80,000 originators nationwide. So look, going from 180,000 almost in 2021 to maybe 80,000 at the end of 2023, that's a little bit of a scary number. And now look, those numbers don't tell the whole story. I know there's originators that might work at banks or credit unions that may not be included in that number. I also know that a lot of originators who are no longer in this industry are call center loan officers. They tend to be more transient. They take a job in the mortgage business. They're given leads during a refinance boom. And when the market shifts, there's not as much opportunity for them unless they can successfully navigate over to the self-generated side of the business, which some do, most cannot. And so they go back to some other type of sales job. But for many of us, even people who've been doing this for a long time, a market like the one that we're in right now can be extremely challenging. Look, as we know, there is no refinance business happening, maybe some cash out refinances here or there. I still think it's an underutilized product, even with interest rates as high as they are. I've talked about this in the past. There's people that could really benefit from restructuring their debt, their overall household debt, and possibly rolling it into their mortgage, freeing up some of their cash flow, and then refinancing to a lower interest rate in the future when interest rates, most likely will drop. But nonetheless, I digress on cash out refinances. The bottom line is this is a really difficult market, and it does make people question whether or not it's worth it. Is it worth the time, effort, and energy that you're putting in? And that's what I want to talk about right here today is, are you putting in the time and effort necessary to be successful in this industry? You know, I was watching a good friend of mine, Ryan Hills. He does a podcast and it comes out every Monday. It's called the REsource.tv, and he's been doing it for 15 years. So congratulations, Ryan, on that. But I was watching his episode on Monday, and he also talked about this change in the number of loan officers that are in the business. But what I really took away from his episode was he put up a little cartoon, and the cartoon showed two different booths. And on one of them, it had a sign that said, "Hungry to win." And as you can imagine, there was a whole line of people behind the sign that said, "I'm hungry to win." But the other booth had a sign above it that said, "Hungry to do what winning requires." And under that one in the cartoon, there was nobody standing in line. And I thought it was kind of funny because the reality is that all of us want to win. You know, of course we want to win, but who out there is willing to do what's necessary to win? And the reality is not a lot of people. There certainly are some that are winning in this market. There's no doubt. I see the production numbers of some of the top producers out there, and there's absolutely people writing a lot of transactions even in this market, and they're clearly doing what is necessary to win. So this goes back to my previous episode where we talked about the fundamentals, the basics of mortgage lending, mortgage origination. And so I ask you again, you know, are you doing the things? Are you doing the basics? And if you're not, and you're also someone in that camp of trying to figure out, is this the right industry for me? You know, should I just go get a day job? Maybe you have one of your loved ones, a spouse or someone in your family, of, you know, a parent or someone who's a mentor saying, you know what, maybe you should just go get a real job. And those pressures are real, and it makes you question whether or not that might be the direction to go. And only you can answer that. But I think that there is a roadmap for success, and it's following the steps that we've laid out in the past as far as what are the basics that you need to be doing with your time. And then not only do you do them, you don't stop doing them until you get the result that you need. Now, on my notes here, I underlined need, not the results that you were hoping for or the results that you want. No. What are the results that you need? And you can't stop until you achieve that. And that probably means more hours. It probably means more phone calls. It probably means getting out of your comfort zone more often, creating more content. The reality is we have to double down in a market like this in order to achieve that level of success that's going to sustain us in order to stay in this industry. So this is really just me acknowledging what's happening in our industry. A lot of people are getting out. Personally, I think it's a good thing. I've been through these cycles before. And, you know, what we do know, and I'm going to talk about it here in a minute, is interest rates. You know, we know that they'll get better at some point in the future. We know that all the loans that we're writing right now will most likely have an opportunity to be restructured at some point in the future. And there'll be a lot less people in our industry to go after that business when the time comes. But you got to get there, and you have to get there in a way that not only sets you up for success in the future, but allows you to, you know, meet your, you know, make ends meet right now. And so just, you know, I ask everyone to take inventory of what it is you are focused on, the amount of effort that you're putting in. And if you're thinking about throwing in the towel, I would ask you to really look inside and ask yourself, are you doing everything that is necessary to win in this market? And if you're not, maybe give that a shot before you throw in the towel. So that's my take on that. It's interesting. It'll be interesting to watch what happens with these numbers of originators and see, you know, when the next cycle kind of happens. When do we see the bottoming out of people leaving the industry and people that decide to get back in? Because, you know, it does create opportunity when there's a lot less people, a lot less saturation in an industry like mortgage origination. So the next thing I want to talk about is a little bit about the market and the economy and interest rates. Now, look, up on the TV behind me, I could show you guys graph after graph after graph that shows you that inflation has come down. It was pushed up by, the printing of money, and that the money supply is now down, and that inflation's down as a result, and the supply chain issues are fixed, and all of those things that we've talked about on this podcast. But I want to stop on this slide right here, because I've mentioned before that one of my favorite places to get content is from Dan Rawich, and DoLikeDan.com. He's got University of Options. Dan is a longtime mortgage veteran, but every Sunday he puts out a market mentor email and gives us permission to use these slides. And so this is one of Dan's slides that he put out. He did put it out on Monday because the holiday. So he does like to wait till the last minute. I can relate as a procrastinator myself, but it always comes out before the week starts, and it's good stuff. But this graph is very interesting because what it shows, if you can see those two peaks right there, I gotta look at my notes here. So the blue line that you're seeing there, and we're gonna blow it up here on the screen so you can see it even better, but the blue line is 1966 to 1982. And this is just showing you inflation during that period of time. And then the yellow line is 2013 to 2023, just kind of overlaid on the top. And how uncanny is that on how inflation kind of rose a little bit, came back down, spiked up, and then came down so quickly. But then that's where the yellow line stops, because that's right now, that's 2023. And what's interesting about this slide is that if you look back at what happened, I guess that would be in the late 70s. If I move my head a little bit, you can see it. Look at what happened. It spiked up again. And it's so scary to me how closely we're following the first half of that graph. And this, and what Dan was saying is that this slide might give you some insight as to why it is the Fed is so concerned about inflation. We can sit here and beat the drum that inflation is back to where they want it. We're really close to the 2% that the Fed's looking for. Why do they keep raising interest rates? Why are they so persistent on stamping out this inflation? And this graph right here tells you at least a glimpse at what they might be considering, is that last time inflation spiked up like this, came down, it flared right back up, and it was even worse than the first time. So I thought it was interesting to share this slide. Dan went pretty quick through the slides on Monday night, but this one for me was like, whoa, wait, hold on a second, because every other slide that we were looking at is showing us that inflation's doing exactly what we expected it to do. But you know what's not? Is interest rates are not coming down yet. Matter of fact, they're bumping along the highest rates that we've seen in this cycle. And so I wanted to talk about that briefly as well, because look, I'm still of the mindset that we are going to see interest rates come down. There's just no question about it. I think there's a lot of pressure going to be put on the Fed to do something, because as we've talked about in the past, having interest rates this high, yeah, it's not that fun for the mortgage and housing industry. It's really expensive for people to buy homes, but I'll be honest with you, that's not going to be the driving factor. The Fed is not there to make sure that every person who wants to buy a home can afford one. Matter of fact, there's plenty of people right now who are high income earners who can't afford to buy homes, and there's so little inventory. I don't think the Fed's really focused on fixing the housing issue, But you know what they're going to have to focus on at some point is the cost to carry this debt for the federal government, for municipalities that rely on debt as well. All of our companies out there, the corporate debt, what it's going to do to the consumer as far as their credit cards and car payments and other things like that. And that's a whole lot of debt. As we've talked about, this is a economy that is based on debt. And right now, the cost to service that debt through all spectrums, including housing, but more importantly, all the other areas, it's going to make it difficult for companies to stay in business, for households to make ends meet, etc. And so I feel like you have that pressure going to be, put upon the Fed to do something here, or, something's going to break. And I know they want something to break, but if they push it too long, then it's going to break really hard. And I don't think any of us want to see the result of that. So even, regardless of what the Fed ends up doing, I think they're going to hold rates. They may raise one more time. They're probably going to hold them up as long as they feel like they can get away with doing that, to make sure we don't see this double bump up in inflation. But in the meantime, inflation has come down, and there's no question that interest rates will come down as a result. Mortgage rates will come down. Are they going to get to the mid five, that 5.5% range, which I was predicting was going to happen by the end of the year? I don't know. We're in September, and I don't really see that happening. But I do think they are going to come down and start coming down relatively soon. And my guess is at least that initial phase is going to be rather quick. We see some improvement, and then it'll take some more time, probably well into or towards the end of 2024, to get to where, we see rates in that low 5 range. So anyway, that's my prediction on rates. I get asked this all the time on what I think is going to happen. But in the meantime, you guys, we haven't seen a lot of movement with inventory. Still, a real choke point right now is inventory. So we'll be interested to see as rates do come down, if that picks up and what happens there. But that's my my thought. I'm not giving you a number because I don't have a number on where I think rates will be at the end of the year. I'm doubting they get to 5.5 at this point, but I definitely think they're going to improve, rather significantly from where they're at today by the end of the year. But time will tell. This is unprecedented, what we're seeing in the market and the reaction to it. And we haven't seen the Fed act like this in a very long time. And that was a whole different regime back then. And so, in a intent to not let what happened in the 70s and 80s happen, maybe the Fed really, keeps the hammer down on this one. But time will tell. So for today, you guys, that was my message to you. Take inventory of if you're doing what is absolutely required to succeed. If you're not, put a game plan together. Look at your calendar, plan it out, go back and watch some of our previous episodes where we talk about the fundamentals, the basics, the building blocks of what it takes to be successful, and start implementing that stuff into your business. Because I promise you, 26 years in the mortgage business, we've been through these cycles before. There's not a better industry out there. And for those that are strong and those that are focused, there's no reason you won't continue to work through, a challenging market, but a great industry with a lot of upside coming in the near future. So with that, you guys, thanks again for your time and attention. As I mention on all of my episodes, obviously, please like and subscribe, leave comments down below. That definitely helps us come up in searches. But more importantly than that, there's nothing better than a referral to a friend, right? So if you enjoy our content, please let someone else know that's in the mortgage or real estate industry to check out Market Shares, people that you think might enjoy what it is we're talking about here. And until next time, take care.